Good morning. It's August the 5th, 2023. This is the Wall Street Weekly Wrap-Up with your host, John Newquist. And it was a big earnings week, so we're going to have a little bit more than normal. We'll start taking a look at one of our portfolio holdings, SOFI. Everybody's expecting the student loans to kick in October, anywhere from $250 to $400 a student, 40 million students. So SOFI is definitely going to benefit on that. You can see the charts in an uptrend. All the indicators are good. They beat on the revenues, raised the guidance because they're going to get the money unless something happens. They did lose some money, but I think that's going to change. So revenues, big jump that's going to come up. So we'll see. I think SoFi is going to be definitely a good stock. AMC, we bought AMC. I forgot to put that in the end chart, but best revenues in the 103-year history. Barbieheimer, it was great. It's much stronger than they've ever thought it was. The company, again, been in a downtrend, but, you know, like these meme stocks, which we've had, this is now our fourth time for AMC, I think it's going to go up once the writer's strike ends, and then all these movies will start to come out in the fall. So figure not going to settle in October, August, but will probably be, September, October. And the stats of the week, oil still above 80. I was watching analysts talk about it might get to 100. That's going to be ugly. $3.99 in my town today, and so they're trying to hold the $4, but it's going up. Again, the Saudis are 2 million barrels a day. They're not pumping, so it's been tough. And if China picks up more, then it's going to be in there. So I put down the soybean share because you talk about when the war started over Russia and Ukraine, a lot of grains got hit, so the prices went up, and you can see soybeans coming down pretty strong. It's not going to be as expensive. The index is negative 4 straight days for the NASDAQ. If it hits 5, that'll be similar to October when we bought a lot of stocks. So the NASDAQ's been taking the hit. But I always put this Bitcoin chart because it's at about 29,000. But it's in it's an uptrend, and the question is, it's going to come to this wedge and it's going to break out, and then we'll see which way it goes. Unemployment rate, surprised me, it surprised you, under 200,000. That's a big drop. Everybody's expecting the economy to take off and it's going to be an issue. Not happening. So the unemployment rate was 3.5. That it was good. We're going to see some of the core CPI indexes coming down, like rents probably 8-9%, used cars probably 30%. It's just sky high for used cars right now. And then SIRI's one of the stocks we own. You got crazy, you got up to $8, just on a short squeeze. But the circle is, the 200-day moving average, it crossed, and that's a big deal, and that's a positive sign. So if you want to buy, you're buying right at the cross, and that's not a bad deal when you're trying to pick some stocks. We want to let it, base a while, and of course, if you can figure out this was the bottom, then good luck. But we try to make sure the index, is definitely doing better. Revenues fell. They make profit. That's the big thing I like about SIRI. They make money, and I think they'll do better. I use it all the time, so I can't, see, why they don't do it. It's expensive, but just having access to everything you watch, in your car is kind of nice. Pfizer, again, with COVID going down and kind of not getting the drug subsidies, the revenues dropped quite a bit. Still not bad. Earnings, making money. The wedge is coming up here. We know the pharmaceuticals, 54 down to 36. We're trying to buy the stocks at the somewhat low. I think it's going to break up higher because it will do better. These stocks pay a good dividend. They've been one of the worst investments in 2023. And I think it's, you're going to see a rebound. So we're also bought Merck in the recent time. Merck's got a slight uptrend, broke a little bit bull, and it's coming close to its ceiling. So again, another one is profitable. Revenues went up a little bit, but I think all these drug pharmaceuticals are going to be a good bet, for the last half as well as the 2024. We sold Advanced Micro Devices. AMD, look at this revenue. 18% drop. That's not what I expected. I expected at least to still do well. Everything is down. Data centers, client segments, gaming, PCs, everything is down except for AI, which is not what AMD is doing. So even though we've doubled our money on AMD, we're going to sell it because the stock is going to have some trouble in the next 3-4 months. Semis are in trouble anyway, and so we're going to lighten it up. We'll just keep the NVIDIA as our semi and come back to AMD. It's a great company, just not in the sectors. We need to see them making some money on AI, not investing a lot of money to make AI. That's what we want to not see. So, I'm watching people, people hold it in their portfolio, and I says, well, might be a good time to take it. Starbucks, I bring it up because, it's a good indicator for China. And the weekly sales in China are sequentially going up in single digits. So China growth is coming back very slowly. Revenues go in there. One of the things I'm starting to see is how much you're going to pay for a cup of coffee. $6 is what it is here. If you had your cream and your sugars and the flavoring or something else like that. And that gets to a point where people start thinking, I can use the Keurig for under $1. And that's what I think people want to, look at, because, you can't keep on raising the prices and expect people to pay when they can have an alternative that's a lot cheaper, 85% cheaper. So just think about that. That's why I'm thinking Starbucks is, and Dunkin's and all these other ones are going to have some squeezes if the economy drops like we predict in September, late September and October. People are going to make the cuts and they're going to go to the Keurig. So right now it's been flat. It's been going through. It's an ugly wedge. I don't like the wedges that are like this, and it looks like a, a microphone or a megaphone, because then it just goes, unpredictable. But I think it's been pumping around on this bottom, and that's got a good chance to break through it. Apple, they love it. I watched Kramer go in there and says, oh, don't, it had a great quarter, but, revenues fell 1.6, 3 quarters in a row, lower revenues. This is a $3 trillion company. This is a PE of 30 when the index is 21, and they're not growing. This is not what you want to have. You want a company. You look at Microsoft, 8% sent the thing in, and Apple's not. Of course, everybody's blaming the iPhone and the iPad and everything else. The service is great for Apple, but holy smokes, it's not growing. And what's going to have to happen is it's going to be margin compression. Again, if we get the decline in the student loans, this is where people are going to start to cut back. And I don't think the $1,400 phone is what people are going to buy. There's a lot of $500 phones that are perfectly good. So you're going to see that change. Amazon, one of the 3 big ones. Remember, we own Meta, we own Amazon, and we own NVIDIA. And all of them are growing after earnings. Amazon 10%. So I use Microsoft 8%. If you can do 8%, then you're definitely in the portfolio. A lot of earnings, a lot of stuff. They've done a lot of cost cutting. The services one day is coming up pretty good. I think they're going to do well. They've already got into the sports, and you're going to see a lot of difference. And I think essentially hitting on all cylinders right now. And then Generac, another one we sold this week. Horrible. Look at this, 22% down on revenue. Maybe they don't call the people back when they go in there. Maybe it's too expensive. You got Caterpillar, Kohler, Briggs & Stratton making backup generators. Competition's pretty tough. I kept on watching. Oh, the Texas thing, sales are great, and then the revenues fell. Sales weren't great. It's hotter than it was much than last year. The sales should have been 18%, 20% this year, up, not down. So you can see it dropped, and we got out. When it's bad news, we made some money, not much, but we got out. And again, we're still overweight. We're underweight industrials. So I got a couple of them like MP Materials to take a look at on Monday, and we'll take a look at it. But we sold Generac, AMD, and the other one. So I just put DraftKings. Look at an all-time high for, not DraftKings, but an all-time 52-week high. It's been going up. Sports betting is hot. If you go back and you would have bought it at the crossover, right over here, you done well. At $16, you're almost doubled your money by now. That's one of the things. The trouble is, we had already bought all the stocks in November, so we're overweight and we're going to add any more, no matter how good they look. So that's it. Now, if you had a chart like this today, probably we would add it. And that's the trouble. You have so many good tech stocks that are good in the October, November range that we doubled our money on, that when this company doubles, in the crossover around April, is you can't add it because you're already way too overweight anyway. So, you know, there's always opportunities, and you just got to look and look. So we'll see you next week. Thank you very much. Have a good week and stay cool.